Good evening, everyone, and welcome to the Brian Crombie Radio Hour on Saga 960. I was on a course recently and had someone come speak on ESG. ESG is like this three letters that, I think a lot of people don't know what they all stand for, what they mean, how they're going to change business, what, they're all about, et cetera. And so I thought it'd be really helpful to invite Katie Wheatley back to our show to talk about ESG and what it all means for us, for companies, and for our country and the economy and the environment. Katie, welcome to our show.
Thank you very much, Brian. It's great to be with you, and I'm glad to hear that you found some value in the earlier discussion that we had during that course on compliance.
I did. Katie Wheatley, by the way, serves as head of Canada for the UN-supported Principles for Responsible Investment. At that organization, she works with a broad network of institutional investors to build sustainable markets that contribute to a more prosperous world for all of us. Katie's approach to responsible investment is informed by her previous work across Canada in community development, Indigenous rights recognition, and environmental conservation. Impressive. So tell me a little bit about what you actually do. What is ESG and what do you do to promote ESG?
For sure. So maybe I will start by defining ESG. As you noted, it is a really big buzzword these days, and it's kind of crept out of the investment space into broader discussions and the media and political spheres. But to go back to its core, ESG was first coined in 2005, actually, in a landmark study that was commissioned by the UN Global Compact called Who Cares Wins. And that report had
Who cares wins.
Yes. So that report had made the case that embedding environmental, E, social, S, and governance, or G, factors in capital markets makes good business sense and leads to more sustainable markets and better outcomes for societies.
Excellent. Okay. And so what is your organization, the UN-supported Principles for Responsible Investment, do about ESG?
So we really dig into the theories underpinning it. We look at responsible investment, which is the framework that we use to implement ESG investing, to understand the implications from an investment perspective of ESG factors and to support a really broad global network of investor signatories in incorporating ESG factors into their investment and ownership decisions. So we have a network of over 5,000 signatories to 6 key principles that are really at the core of the work that we do. And those 5,000 signatories are asset owners like pension funds, universities, religious organizations, and foundations, as well as investment managers. So the ones that actually undertake day-to-day investment decision-making, often on behalf of clients like those asset owners. And then service providers that are also involved in the space by doing things like advising clients on ESG investing. And so the 5,000 plus signatories represent over 120 trillion US dollars in assets under management. And we work with them to really improve their their public reporting on their practices, to improve the actual responsible investment approaches that they take, to provide programming, thought leadership around emergent issues. So things like, what would it look like for an investor to aim to get to net zero carbon emissions, and then programming that actually helps them enact their vision for responsible investment. So things like programs that bring together investors to engage with portfolio companies on key issues for them. So that can look like human rights in the mining sector, or climate targets in the finance or banking sector, and more.
So are you trying to force these investors to adhere to ESG principles? Are you trying to make it easier for them to do so, to report on it? Like, what exactly is it you're trying to do? Is this, government trying to control companies and what they invest in, or the private sector influencing each other?
This all stems from an underlying belief that responsible investing is a strategy to incorporate ESG issues into investment decisions and active ownership, and that complements traditional financial analysis and portfolio construction techniques. So this isn't meant to displace, it's not meant to force things like particular values or beliefs onto investors. This is really a framework meant to enhance their approach based on an underlying belief that, especially for long-term investors, ESG issues are very material to the outcomes at both individual portfolio companies, but also their portfolios as a whole, and that if they're attending to ESG risks like climate change, that they're better equipped as an investor in the 21st century for the modern challenges that we face.
So, back in the 60s and 70s, 1960s and 70s, people complained that managements were only interested in furthering their own selves, and there was this big concept called sort of agency theory that people were there for their own benefit. And we've had different things like the triple bottom line, or 3P. What was it? Profit, pollution, and people, or something like that. And now ESG. When I went to do my MBA, the rage at the time was Michael Jensen, who said that there's one thing that you want to do, and that's return money to the shareholders, and that anything else made a mistake. How do you respond to that when you're thinking about, triple P and double bottom line and agency theory and ESG? What is the objective of companies? Is it to just make money and return money to the shareholders, or is it to do some of these other things that we've talked about?
Mm-hmm. One thing on the triple P or triple bottom line, it's a profit, planet, and people rather than pollution. We're not aiming to enhance pollution.
Sorry,
but
the reverse of pollution.
Oh, of course. Right. You're really in an alphabet soup in this world. There are more acronyms than we can count, and more concepts to wrap your head around than it seems hours in the day. Yeah, I would say that this is about really making sure that investors are equipped for long-term success, and that in the changing world that we are operating today, it's important to be taking care and to be attending to more than just quarterly returns. There's recognition that, regulation is growing, that there are quite systemic risks at play, like climate change, and that beneficiary expectations, so of, say, pensioners, current and future retirees, that they're realizing there is a lot of opportunity here for investors to have a positive impact within the investment value chain that they operate in. So that includes portfolio which can be public or private companies, direct investments, and others. But really, it's underpinned by a shared belief from this network of investors that they're going to perform better in the long term if they're attending to things that are traditionally seen as non-financial factors, things like modern slavery, doing effective supply chain due diligence to ensure that that there is not modern slavery occurring, that there's no child labor, and other S issues like that, for example, that those are being effectively managed by companies. And those are the companies, given the increase in regulation and public scrutiny, and the fact that, when a company fails to attend to ESG risks, that they face consequences, whether they're legal or just reputational. No matter what, those end up affecting the bottom line. And so it's in the interest of investors to be attending to those.
What's modern slavery?
There's actually a bill in the Senate right now. There's a Modern Slavery Act in the UK, and a bill in the Senate here in Canada to look at it and make sure that there's a framework for oversight and due diligence. But modern slavery would be things like, for instance, procuring or hiring folks from overseas, bringing them here, but having them in relationships with their employers where they are underpaid, they're forced to live in substandard conditions, things like that.
There's been, a bunch of different articles particularly I've read in the National Post, that have criticized companies and or investors that are following ESG principles. What do you think of this sort of blowback against ESG? Has it got some legs?
So there are, I would say, two dynamics that are really at play here. And one is ESG pushback, which would be, quite reasonable critiques in pushing back in saying that there is not enough of a taxonomy around how things are labeled, that funds are being labeled as sustainable, for instance, but not defining what that means, not having indicators around it. And so we're too wishy-washy in our language, and there's not effective frameworks for overseeing that, say, the labels of funds that relate to ESG are actually doing what they say that they will. So that's the first bucket that I would say ESG pushback. The other half, I would say, that is at play right now is the anti-ESG movement. And that's particularly gaining steam in the US, where it's quite centrally coordinated and fairly well funded. And that's a belief that ESG is woke capitalism and that it has no place in business, that we shouldn't be, for instance, upset at companies that aren't reporting things like oil spills. This is just the cost of doing business. And so we should not be regulating for things like social issues. We should not be expecting companies to be managing their pollution and stuff. It doesn't make sense. Let's focus on returns.
What do you think of that? Is it woke capitalism?
No, I actually would take it back to that 2005 study or paper that was pulled together by the UN Global Compact. If you look at the authors of that paper, these are some of the most conservative financial institutions, I would say, in the world that signed on at the start, really recognizing ESG as something that makes good business sense rather than something that's about moralizing companies or, coming in and trying to oversee management on issues that are external to investments. They see ESG, as I do, as about managing risks that are material to returns. So they do factor in.
We're going to have a fun and interesting conversation tonight with Katie Wheatley, talking about ESG, environment, social governance. We're going to take a break for some messages. We'll be back in just 2 minutes with Katie. Stay with us. This is going to be interesting tonight. Welcome back, everyone, to the Brian Crombie Radio, while we're on Saga 960. My guest tonight is Katie Wheatley. She is the head of Canada for an organization called the United Nations Principles for Responsible Investment. She is an applied social scientist. She's got a really fascinating background, and we're going to be talking about ESG tonight: environment, social, and governance. Katie, you've got a bachelor's degree, a double major in international development and anthropology from McGill University. You've got a master's degree in environmental anthropology from the University of Saskatchewan. And you've got like an experience set that is really unbelievable. You've been an environmental officer, a community organizer, a research intern, a policy and research analyst with a Miscue Cree First Nation in Fort McMurray. What the heck were you doing in Vancouver, Montreal, and Fort McMurray? You then worked in Vancouver for the Mesquim Indian Band in intergovernmental affairs. And then you worked with Shareholder Association for Research and Education, and then became the head of Canada for the Principles for Responsible Investment. Really?
When you put it that way, I feel like I have to slow down.
No, but it's unbelievable. You've been all over the country. You've also been in Mexico as a sustainability intern. Obviously, several different jobs in Montreal, Fort McMurray, Vancouver, etc. What a fascinating background you've had in this sector.
It's been quite wide-reaching and really an exciting journey, and I don't think I could have seen where I would end up landing, but it's been great. I actually started when I was 17, I would say, right after high school. I heard about the Katimavik volunteer program that was run for a good 40 years, established by the federal government to send youth to different communities across the country and have them live in a house together. So we were 11 kids between the age of 17 and 21, living together, learning about different communities and giving back full time. And that volunteering full time and feeling as though I was able to contribute to grassroots organizations, a French elementary school in Moncton, a local art gallery in Sault Ste. Marie, Ontario. Those were very formative experiences that really made me keen on any opportunities that I could see to give back and to contribute to the broader community in which I live. So I've been privileged to live in a good 6 or so provinces at this point, and now I've returned
6 or so.
home.
I only counted 3. Okay, so I counted Quebec, Alberta, Fort McMurray, and Vancouver. What are the other 3?
Saskatchewan and so Quebec, Ontario for Sault Ste. Marie, New Brunswick for Moncton, Saskatchewan, lived in Saskatoon, Alberta, Fort McMurray, as you said, and then Vancouver, BC.
What's it like working for an Indigenous band in Fort McMurray?
It was a real privilege. It was a fantastic experience. I did my master's research working with them. So as you noted, I was in environmental anthropology, and I was really drawn to a particular project being led by an academic named Dr. Clint Westman, who had a long set of relationships and research in the Northern Alberta area, working on trap lines with community hunters and thinking about intergovernmental affairs from community perspective. So I ended up being quite interested in the work that the Mi'kmaq Cree First Nation was doing in mobilizing for greater self-determination over their land by petitioning UNESCO for greater international oversight into the management of Wood Buffalo National Park, which is both downstream from the Site C Dam, the Bennett Dam, and then the oil sands, so the Athabasca oil sands region. So their traditional territory, part of which is Wood Buffalo National Park, is kind of at the confluence of various impacts of industry. So I went up to Fort McMurray to live there, to work alongside them in somewhat of a reciprocal exchange, where I did my research on how they were mobilizing and where they were seeing success and the different processes that they were navigating. So industry negotiations, government relations and consultation, and then this international advocacy work at UNESCO to see basically how that was going and how that was furthering their inherent rights. And then at the same time supported them, as an analyst in government relations. So I ended up getting the chance to sit in on a lot of meetings.
And then you were with another Indigenous band in Vancouver. Was that a more urban oriented one?
Yeah, so the Musqueam First Nation has claim to much of Vancouver itself. So the city of Vancouver, they have a large reserve that is very close to UBC, the University of British Columbia. So I worked from the band office again in government relations and industry affairs, again, championing their rights and title. So they are involved in many consultative processes. So through Section 35 rights under the Constitution, they basically, through rights recognition for their Aboriginal rights, they are involved in consultation on any activities that will affect their rights. So things like the right to fish and to trap. And in their case, fishing was very prominent and central in the community. So I worked with them again, really to help serve as a conduit between community voices and those quite bureaucratic processes to try to champion their interests and ensure that there is space for their perspectives at decision-making tables.
The difference between an urban band and a rural Northern Alberta band must be pretty stark.
Yeah, it definitely was. When I was with Mi'kmaq, I had the great chance to fly into their central community hub, which is in Fort Chipewyan, Alberta, and it's a fly-in, fly-out community. There's a winter road access in the winter, but otherwise, you're flying in or you're taking a boat up in the summer. And And so, I mean, that presents really great opportunities for the community. For instance, they have direct land access all around them. So many folks do hunt and trap through the season, and of course challenges too. So they actually just established, I think, what is the largest solar project in Canada at this point, Three Nations Energy, I think it might be called, to try to get off of diesel, because they have to ship everything in and very much do not have access to the same types of energy infrastructure that we would in major cities.
Fascinating background that you've got. You mentioned a couple of times environmental anthropology. I understand environment, and I think I understand anthropology. I've never thought about the two together. What is environmental anthropology?
Yeah, so I was quite attracted to anthropology above all else for the research methods, because it is very, very immersive. So the central method is about doing participant observation, which essentially means that you're going to go and do some really deep, long-term hanging out. You're just living in a space, you're integrating with, your surroundings and the people and everything. And so environmental anthropology looks at applying research methods like that and doing open-ended interviews, focus groups. Those are things I also did during my master's alongside the participant observation. Applying those methods and overarching theories about humankind, who we are and how we move through the world to environmental issues or specific locations and places and ways of being.
Unbelievable, absolutely fascinating. And then you got involved in your current situation, and what you're dealing with now is institutional investors primarily. Is that correct?
Mm-hmm. Yeah. So actually, when I'd gotten involved, it was with Share, a great Canadian nonprofit that specializes in research and education to support asset owners like foundations and pension funds directly. It was very interesting, that transition, because as I was leaving Musqueam, it started to dawn on me that they had a trust, so a community trust that we would see as an Indigenous trust that was, stemmed from, it was a land claim settlement or some type of large scale agreement. And so it was a pocket of funds that were being stewarded on behalf of that community. And it started to dawn on me that existed in many different locations, but this was one type of institutional investor. So Indigenous trusts.
Sorry, go on. Sorry. I was going to say, but most institutional investors, I would have thought, are more boring financial people like myself, not these fun people that are hunting and fishing and flying into, winter access only towns.
Yeah, it runs the gamut. So religious organizations, the churches, for instance, also are investors. They end up amassing endowments over time that are invested to support mission-aligned activities in the long term, the same way that foundations that are based, say, you can have philanthropic foundations that are private or public. So things like community foundations, family foundations. That actually worked in a family foundation way back when as well, that again, they have a long-term time horizon as an investor, but this is a bundle of funds that are being managed with a particular vision in mind about how the money will be dispersed and then spent and mobilized into communities in the long term. So I think those are just some examples of how institutional investors can vary quite widely.
One of the terms you used was responsible investment.
Mm-hmm.
What is responsible investment?
So it is a strategy and a practice to incorporate ESG issues into investment decisions and active ownership. So it's both on the decision-making side around, what you choose to put in your portfolio, what parameters are you going to set, and then active ownership is about how you're going to steward those assets over time. And responsible investing can really complement traditional financial analysis and portfolio construction techniques. So it doesn't displace them, but can complement and be added onto it.
Is it like a yes or no, or is it that you're deciding that you need a higher return if people have got bad ESG credentials? When I think about whether I want to invest in something, I'm going to look at what I expect the return to be. Am I lowering my return expectations if they've got good ESG stuff and increasing my return expectations if they've got or my demands if they've got bad ESG stuff? Tell me a bit about how you actually do this.
Yeah, so we can talk more about the suite of methods that underpin responsible investment, but it's not a yes or no binary. It would be more like you're sitting down at a table and there are many, many options on the menu rather than you're eating or you're not eating. And on the question around financial returns, are we going to be sacrificing it if we consider responsible investment or if we pursue responsible investment? The large majority of academics that actually study the relationship between responsible investment and returns would tell you no. So if there have been several meta studies that I tend to rely on because they're essentially studies that study a whole body of research. So they're much more comprehensive than a one-off assessment. But meta studies, like there was one done of over 1,000 papers, research papers between 2015 and 2020 out of NYU Stern, that basically it was a meta study examining the relationship between ESG and financial performance, looking at both the decades-long history of research that's underpinned that, as well as more recent conclusions. And the body of research has gotten ever bigger. And so they did that meta-analysis to try to look on the aggregate, what are we finding out? And really what we're finding out is that ESG investing has a net neutral to net positive risk-adjusted return effect. So it can improve financial performance in long time horizons in particular. We know that ESG integration can perform better than, say, screening out particular industries or companies. They had told us that ESG investing can provide downside protection, especially during social or economic crises, which I know we've all lived through at this point with COVID-19 still in the rearview mirror. That sustainability initiatives at corporations appear to drive better financial performance due to mediating factors. So it indicates that improved risk management are at play, that there's more innovation, that there are higher operational efficiencies.
So what do you do? Do you give them a point system or something for what they're doing, or how do you analyze this?
So that would be a question I would say for a portfolio manager more than me. At the PRI, we do have a reporting framework where investors that sign on to the principles essentially commit to being transparent about their practices. And we do have a scoring system in a way that helps inform them how they compare to peers in terms of how robust their approach to responsible investment is, where they can improve in the future. And that will get down to the level of detail of, are you including E, S, and G factors in investment decision making? Are you going to engage with any portfolio companies if you see issues in how they're operating and managing things like, say,
so you're really asking companies and institutional investors to be aware of these things, but you're not going through and analyzing the companies and putting a rating or a ranking or a grade system or something like that on their ESG activities.
I'm personally not doing that rating, thankfully.
But you think the portfolio managers
that would be so much work. I think that they're relying on that type of rating system. So Sustainalytics, Morningstar, there are a suite of companies that do provide ESG ratings, and that can be one source of input that investment decision makers, portfolio managers, for instance, can use to help make sure that they have a good picture and inform how they're valuing different companies, for instance, and how they might want to weight decisions and so forth.
Well, I have to tell you, Katie, and everyone listening, that I think this is really a critical critically important conversation. I was at a real estate conference recently, and one of the most prominent CEOs of a big real estate company, who was a keynote speaker, said we've got to be aware of this. And in Europe right now, if you've got low ESG standards, tenants aren't choosing to lease your space, and investors aren't choosing to invest in your companies, and banks aren't willing to finance. And this trend is coming to North America. It's slower coming to North America than it has been in Europe. But if we watch the trends of what's happened in Europe, it's going to come. And those that aren't paying attention to it are going to have real challenges raising money. And the week following, I got a letter from one of my banks on a bank renewal asking for my ESG statement before they would renew the bank loan. And so I think that that's right. And it's something that we all have to be aware of, mindful of, and probably involved in. Anyway, we're going to take a break for some messages and be back in just 2 minutes with Katie Wheatley talking about ESG, what it means for companies and for us and for investors. Stay with us, everybody. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga Night 60. My topic tonight is ESG, environment, social, and governance. My guest is Katie Wheatley. She serves as the head of Canada for the UN-supported Principles for Responsible Investment. She's based in Montreal, Quebec, at the Principles for Responsible Investment. She works with a broad network of institutional investors to build sustainable markets that contribute to a more prosperous world that for all of us. And her approach to responsible investment is informed by her previous work across Canada that we've just talked about in great detail in community development, Indigenous rights recognition, and environmental conservation. And wow, what a experience set that you've got. Really quite impressive. Katie, I think lots of people understand what the E is for environment. Can you tell me what the S is and give me some examples? And even more importantly, I think, you know, the modern slavery we sort of get, and cheap labor we sort of get, and that would probably be in the S. But what's G then? So explain a little bit more about what the S and the G are, if you could.
Sure. So some more examples of what social issues at play can be. One would be human rights. As you mentioned, there's modern slavery. Labor rights are other ones. Child labor I'd mentioned earlier. Working conditions are also a factor. Diversity, equity, and inclusion, inequality, and Indigenous rights all come to mind as example of social issues. And then on governance, we often think of corruption, of executive compensation levels. So what is that executive pay ratio relative to the median worker in a company? Board diversity and structure, political lobbying and spending, and tax strategy.
So one of the most controversial sort of issues in this area, I think, is the DeSantis, governor of Florida, argument with Disney over Disney objecting to the what was called colloquially as the "Don't Say Gay" legislation in Florida. Tell me what you think about that. Was Disney wrong as a company to criticize a democratically elected government's law, or were they right? And did they have a responsibility to do that? And then further, what do you think about DeSantis coming back and taking them to court, and then Disney taking DeSantis to court? Tell me about how that issue plays in your whole ESG framework.
That is a hard one to address because it's now in the courts in the US. So Disney has argued on the basis of free speech that they should be entitled to comment on that type of legislation. But I know that the courts are going to be considering that in Florida imminently. So not as a lawyer, I'm probably not terribly well placed to speak to that particular issue. But I look forward to hearing about what happens.
Some people think that companies have a responsibility to make comment on public policy that they disagree with. And others would say, no, companies aren't people, they're not electors, and they shouldn't be involved at all. What do you think?
I think that there is a role for company engagement and investor engagement in public policy. So at the PRI, for instance, we have resources like a handbook for responsible policy engagement. And one of the things that we look at, for instance, is how how governments are actually looking to regulate ESG, what types of disclosures investors should be making, for instance, what we can ask public companies to be making. For example, in Ontario, pension funds are required to disclose whether and how ESG factors are incorporated into plans, investment policies, and procedures. And we're starting to see the federal government take a similar potential approach, start to consider that potential of asking federally regulated pension plans to do the same. So it's somewhat of a comply or explain basis. And I think that those are healthy types of legislation because they prompt a conversation at a pension plan. Say if you're in Ontario and you're a trustee at a pension plan, because of that ask to disclose whether or not ESG is considered, it is the basis for a conversation at the board table. Do ESG factors, do we consider them to be material? Should this be integrated into our approach or not? And at this point in Ontario, you are allowed to say these are not considered, or these are handed off to our manager to consider. We trust their professional judgment and their advice on this. Or yes, we see ESG as integral in providing long-term returns and therefore providing sufficient retirement funds for our members, and therefore we're going to integrate, and this is how. But overall, that's the type of policy advocacy that we are seeing from some investors. And I think that there is space for investors to be helping to, inform policymakers on what types of issues they're grappling with, what they're thinking through, because this is quite a rapidly evolving space.
What is system level risk?
Also a good question. So I would say that a system level risk is a risk that you can't diversify away from. So a great example, an unfortunate example, but an example nonetheless, would be climate change, where if you hold assets in real estate close to sea level, let's say in Vancouver, where I formerly lived, you are exposed to direct physical risks because of climate change. But you can also be exposed to transition risks, regardless of what investments you hold. We know that governments are looking to move us towards a lower carbon economy in the long term to meet commitments under the Paris Agreement, but also just because we're grappling with the reality that we're approaching runaway climate change. And so whether it's through direct physical risks like the increase in natural disasters, the change in temperature in the long term, the rising of sea levels, no matter what industries and sectors and types of investments you hold, on some level, you're going to be affected by physical risk of climate change, and therefore you can't diversify away from it. There's no way to isolate it out of your portfolio. That would make it a systems level risk.
Katie, you just said that we're approaching runaway levels of climate change. I thought we were doing good stuff to slow down climate change. Do you really believe we're approaching runaway levels of climate change?
And that's the risk, that once we keep warming above 2 degrees Celsius and more, that it's basically going to become a very self-propelling phenomenon, that the rises, say the loss of ice in the sea. So the fact that the Arctic more and more is not freezing over in the winter, that becomes self-propelling. And so it would be very, very challenging to reverse those trends.
Your company, your organization is called Principles for Responsible Investment. Are they just ESG, or do you have other principles of responsible investing?
I can tell you all about those. So we've got 6 core principles, and the first is basically ESG. We will incorporate ESG into investment analysis and decision-making processes. The second is around being active owners. So we will incorporate ESG into ownership policies and practices. And that would be, like I'd mentioned earlier, engaging with public companies in your portfolio to seek improvement on the disclosure or the actual handling of ESG issues. The third principle is around seeking appropriate disclosure on ESG issues by the entities in which we invest. The fourth is around promoting acceptance of these principles within the investment industry itself. The fifth is basically that we will collaborate together to enhance our effectiveness in responsible investment. And the last one is around reporting out on activities and progress towards implementing these principles.
Impressive. Now, I have to tell you, until I heard you speak at this seminar a couple of weeks ago, I'd never heard of your organization. So what are you actually doing in Canada and globally? Like, what do you do?
Yeah, there are several programs of work or areas of focus, I would say. One is around thought leadership. So, for instance, we will take up emergent considerations like what happens if all companies try to evade taxes to the degree that is possible and move to tax shelters globally, and we don't have something like a minimum tax corporate rate in place. What does tax mean for investors? So there's the thought.
Thomas Piketty in Capital in the 21st Century wrote about that, and he actually showed that there was something like 3% of GDP globally that disappeared out of the earth every year, which is effectively monies that disappeared into tax shelters somewhere.
That is a great example. So that type of thought leadership, the regular publications, things like how do you do responsible investment in listed equities and different varieties of listed equity. What about in real estate? What about in infrastructure, et cetera, et cetera. And then there's also regular convening, so networking for investors. So let's say you are from a large US foundation, it would probably be helpful to hear from peers in the UK, in the EU, in Canada about how they're aligning money and mission. Maybe that's a core interest for you. And so we bring together investors at things like our flagship conference, PRI in person, which is in Tokyo this year, actually. And then there are over 100 events every year that you're invited to as a signatory to participate in. So I run some communities of practice here in Canada that will cover things like, how can we improve our investment and stewardship policies to make sure that they're robust enough so that our vision for responsible investment is actually going to be enacted on a day-to-day basis by the folks managing our money, to what does Indigenous rights mean for investors? Why is this material, and how can you start taking action as an investor on reconciliation? And then the last major piece of work beyond those pieces of thought leadership and the convening or the networking that we do, the last piece is around reporting. So that reporting process that all signatories undertake to document their approach to responsible investment and what it looks like in policies and practices on an annual basis is something that we oversee. And so that's another big piece of work. Here in Canada, we have over 240 signatories today. So asset owners, managers, and several service providers. We also have strong partnerships with local stakeholders and counterparts here. So local nonprofits, for instance, or think hubs for sustainable finance. And then we also have policy engagements and research that we do around fiduciary duty. In Canada, what's the degree of permissiveness that we see in Canadian legislation, regulation, and jurisprudence towards responsible investment? And then, as I'd said, more local communities of practice and issue-specific events and roundtable discussions to exchange ideas and work through common challenges.
Katie, if people want to check out your organization, maybe read some of your thought leadership pieces, et cetera, is there a website they should go to?
Absolutely. It's unpri.org. So UNPRI.org.
We're going to take a break, a final break for some messages, and come back with some concluding tough questions for Katie Wheatley of the Organization for Responsible Investing. Stay with us, everybody. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. I'm really enjoying my conversation tonight with Katie Wheatley. She serves as the head of Canada for the UN-supported Principles for Responsible Investment. And we've been chatting about ESG, environment, social, and governance, and those principles and how they apply to companies and to our society and to investment, et cetera. But we've also been talking about Katie and her experiences really across Canada that are really quite impressive in Indigenous communities and other organizations. Katie, I want to ask you two questions, if I could, just sort of end this up, because I think they're really important issues in Canada today, and you've got a unique view, at least a unique experience, which maybe leads to a unique view. I think one of them is Indigenous rights, and the second one is our oil and gas industry. And let's start with Indigenous rights. You talked about reconciliation earlier. I understand that over a majority of all the Indian claims have yet to been settled. What do you think in Canada we need to do to sort of put right our relationship with our Indigenous peoples?
I think that there's a great roadmap that was produced by the Truth and Reconciliation Commission, the calls to action. So there are 94 of them, I believe. And my work has focused really on call to action 92 on business and reconciliation. So at my previous workplace, Share, we'd done work to dig into what it would mean for investors specifically to contribute to reconciliation. How does Indigenous rights factor into their work? But also, how can they support the growth of the Indigenous economy? What does it look like to actually embed an Indigenous rights framework into how they're looking at potential and current investments, and how can they make sure that they're having a positive impact in navigating relationships with Indigenous peoples that have occupied the lands on which we operate long before you and I were here. And so I think that it really depends on where you are in society, your role, starting with things like learning about historical occupation and nearby nations, whether they're First Nations, Métis, or Inuit, but then looking beyond that to, what roles do you serve in the community? Is there sufficient representation of Indigenous folks there? If you own a business, within your supply chain, are you procuring from Indigenous businesses? If you're an investor, when you go to make a new investment, are you looking at relationships that the potential investee company has with nearby communities, whether they, go beyond seeking license to operate. So we'll be here, you might not like it, but we're here. To actually make sure that there are Indigenous voices at the table and that there's participation in decision-making to ensure that, that you're not part of infringing upon Indigenous rights. I think it varies widely, the roles that we can take up depending on, what spaces we occupy in society and in the Canadian community, but starting with those calls to action from the TRC generally is a good place to go.
I think that one of the trends that I've seen of late that I'm most impressed with is equity participation by Indigenous groups in different development plans that are taking place either on or near their lands, and having them participate as participants, and sometimes even as equal participants in the decision making and the economic benefits from those developments. I think makes a ton of sense. Let me turn to my second question then. You've spent some time in Fort McMurray. I have as well. And Fort McMurray is an incredible place. It's got almost as many reserves as all of Saudi Arabia. And yet, some people out there, when I talked to them, said they thought that people in Ontario and Quebec just wanted to close them down and shut them down. And that is the perception that you sometimes get from politicians in Alberta. And then at the same time, when talking to them, a lot of them, I was sort of led to think that they might be climate change deniers. They weren't. They were really quite worried about a sustainability and sequestration and taking carbon out and a whole bunch of other issues. And then, someone says we should do a pipeline to the East Coast for natural gas and then liquefy it. And someone says, no, Ontario, Quebec will never allow a pipeline to be built across those provinces. And carbon taxes are going to put people out of work. What do you think is the right strategy?
I thought really when you were mentioning, we don't think people in Quebec are at all supportive of our work. It's funny how many Quebecers I actually came across when I was living in Fort Mac. I roomed with a few of them actually, which was very funny. I think for a really long time, especially in the boom years, it was such a draw for folks looking for, a great income, regardless of where they were coming from, what their previous experience had been professionally, there was something for them in Fort Mac. So it was really seen as a land of opportunity. So it's interesting to try to grapple with that. Do we like it here in Quebec versus, are we also benefiting somehow on a societal level, more than individually even? But
can we reconcile? How do we reconcile development of oil and gas and jobs versus the environment?
It's incredibly tough. I do think, though, at some level, we have to look at the long-term transition risks. We know that we need to get to a lower carbon economy. The degree to which the oil sands are part of that in the very long term is kind of uncertain. And there's been a lot of work that's starting to be done around how to make sure that that transition is just, that it incorporates and is thoughtful and considerate of workers and Indigenous communities, so that we are not, closing up the oil sands job sites and stranding people there, as well as the assets that we would be leaving behind. So it's important that this is a broad public conversation, because in the long term, I think that we know we need to get to lower carbon energy sources if we want to curb that climate change trend. But we want to make sure that no one's left behind along the way.
Sounds like both these topics could be shows on their own right. Thank you, Katie Wheatley, so much for joining us today and telling us about ESG. That's our show for tonight. Thanks for joining us, everybody. Good night.